lunchtime. That's your forecast from the WSIC Weather Center. I'm meteorologist Chase Myers.
Hey folks, you know Randy Marion Ford Lincoln in Statesville is known for the prices and selection, but I tell you what, you may not have known the distinction that this store received with Ford and Lincoln this year. We received the President's Award for 2023 for Ford for the 5th year in a row. We also received it for Lincoln for the first year, and I tell you, those awards don't come easily. It all boils down to taking care of the customers and having the vehicles you want in stock for you to buy.
The following is a paid program and does not necessarily reflect the views of WSIC.
Hello and welcome to Dollars and Cents, presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much for hanging with us here. 4 o'clock hour on Thursday. You've got 53 minutes and 35 seconds until we get to that 5 o'clock bell, and I appreciate so much you spending that time with us here on Dollars and Cents as we're giving attention to all things economic and financial. Now, going to get into some caveats here. As a previous listener to this show, that all the things that we're talking about here, we're doing so at a very global kind of level. We're talking about those things happening around us. You're probably seeing them in the news headlines. We're going to be talking companies again today. We got a few straggling earnings reports before we get into the big ones here in a couple of weeks. We're going to be talking about some things positively, some things maybe not so positively. But in doing so, you recall as a previous listener that nothing that we're talking about here is intended as a specific recommendation for you. Meaning that even though we're getting into these things and we're going to be getting a little bit granular with them, especially with some of the details that are sitting out there, just to get some clarity on that, perhaps even provide some insight for you. Again, everybody's situation is unique. We strongly, strongly encourage you. Reach out to your tax advisor, your financial advisor, or if you'd like to reach out to us at North Main Financial Group, love to hear from you. Love to chat with you about your particular situation, see if there are ways in which we might be able to be helpful to you. Online, you can find us at northmainfinancial.com. That's north like the direction, Main like the street, financial.com. We have a contact page on there. Leave us your email address, a phone number. Let us know the most preferred and desirable ways for us to contact you, again, at northmainfinancial.com. All right, let's get into it. This is the What's Hot segment. I used to call it the What's Hot segment. I don't think I can really do that legitimately anymore. I mean, there is just a tremendous amount of information. Perhaps it's because of the election season and the Federal Reserve beginning to get into a rate cut cycle that we're starting to see these kinds of things sitting out there with greater frequency. But certainly there is a lot of news. So I'm going to jump right into it. Got a lot of items on our plate here. Want to make sure that we touch at least most of them that we have on the marquee. Going to start with one that may or may not be a familiar name to you. Certainly it has been in the news headlines. If you've been following anything that has to do with AI or artificial intelligence, this group, not publicly traded, it's still a private company as of this point, but certainly has dominated let's call them the most prolific headlines that are out there with regards to the development of artificial intelligence. The group's name is OpenAI, just like its name suggests. You may know them by their primary product that's out there in the public realm, and that is ChatGPT. Now, I'm not going to get too granular on what it is, probably because I don't know completely everything that it does. But generally speaking, ChatGPT allows you the opportunity to use artificial intelligence to put various things together in terms of composition, pictures, art, other kinds of items that you may want to develop, and do so in a digital way by scouring literally the extent of the internet universe. Pretty impressive stuff. Better not ask me any more questions beyond that, because that's way above my pay grade in understanding. But why am I bringing it to you here? Well, there was a lot of news that came out this week regarding them. And actually, they were talking about it on Good Morning LKN, which, by the way, if you're not listening to them, Good Morning LKN, 7 a.m. to 9 a.m., Monday to Friday. Justin, Bill, Mamie, great group. You'll not only learn some things, but you'll also probably crack a smile as well, as they have a great time there in the mornings. But they were talking about it, and specifically OpenAI shifting from a non-for-profit company, which is how they were developed initially, now looking at the possibility, let's call it even likelihood, that they're going to be a for-profit company. Now, you can't just push a button and do that. I don't want to get into the legalese on it. We probably have some business law attorneys listening who could speak into it and give me the real granular explanation for it. But generally speaking, each company needs to make a declaration about whether they're going to be a nonprofit or a for-profit company at their origin or at their genesis. And OpenAI was developed, a private company, was developed in order to be a non-for-profit company. Now, that provides some tax breaks, but it also provides some, let's call them limitations in terms of profitability, how you use your profits, etc. So there are definitely, let's call them restrictions or requirements that come with being a nonprofit business that you don't have as much restriction when you are a for-profit business. I can't say this was completely out of the blue. I can't say that the movement of OpenAI from a private company to a public company, which it seems like they're going to start doing, was completely surprising. And it's for this primary reason. OpenAI has a tremendous number and of very, very wealthy investors in it. Even though it's a private company, a number of investors have made very, very large investments into the company to be able to not only participate in current profitability, but in the possibility of future profitability. Now that OpenAI has just moved, let's call it meteorically, in terms of valuation here over the last couple of years, ChatGPT really came out into the public realm in 2022. Now that they have moved meteorically and their most recent capital raises have been literally in the billions of dollars that they have raised, I would offer up, it looks like, can't say this for certain, but it looks like that there is a desire among the investors to have a for-profit model, because with a for-profit model, there is not a limitation on the amount of profit that the investors can enjoy. I'm making a supposition there. And it probably is going to be true that there's going to need to be some negotiation with some of the early investors who invested into the nonprofit company. But generally speaking, there are caps or limitations on how much profit that you can enjoy when you are an investor in a nonprofit company or a nonprofit entity. Now that the OpenAI has taken off and there are, who knows, limitless possibilities. I've heard that said certainly many, many times here over the last couple of years in terms of its capability. There seems to be a desire for perhaps greater ability for investors to participate in those profits. I know it's getting a little wordy on you. I hope you're hanging with me. Really, I'm looking at OpenAI with a desire now, it seems like, to move from a nonprofit model into a profit model. Now, there are some other things that happened there as well. And yes, I am spending a good amount of time on this because, yes, OpenAI is big, but really AI overall has dominated so much of our financial markets this year. I feel it's worthy of the discussion. Then in looking at it, there also has been an exit of several of the C-suite folks, meaning the folks at the high top of the executive team. There also has been an exit. Don't know exactly why. Not a whole lot has been made public for the reasons why these executives have left. It could be that they're not in favor of moving from a non-for-profit to a profit model. Don't know. But it is semi-concurrent to this space where Sam Altman, who is the CEO and one of the primary founders of OpenAI, maybe because he is wanting to move in that direction. And there is some disagreement in terms of whether that's a good idea or not. And so that's the kind of thing that we're really watching from a company standpoint. What does that mean for OpenAI? As one of the most dominant players in the AI space right now, not the only one. I mean, we just had some word from Meta this week about their new AI possibilities, including sunglasses. We had some word from Apple with the iPhone, with Apple Intelligence. I mean, we're catching it all over the place. And it really has started to come to the forefront a little bit in terms of how we experience artificial intelligence, how we experience it in our day-to-day lives. And frankly, it's probably going to continue to increase from where we are right now. And that's going to be something that we're going to watch. What does that mean for businesses? What does it mean in terms of our personal experiences? How do we experience AI in our day-to-day lives? Well, we're going to talk more about that. But before that, we're going to hear from our sponsors. Thanks for listening on WSIC.
Dollars and Cents with your host, certified financial planner Joshua Dobi, continues straight ahead on 105.9, 100.7 WSIC.
Hurricane Helene making its way toward Florida.
on Friday. The Village is open all day long for shopping and dining, with Hey Ladies taking the stage at 6 p.m. Bring your chairs and enjoy on-site beverages from Red Rocks. Live Under the Oaks kicks off at 6 p.m. Friday. This Saturday, the Tabo Walk begins at 2 p.m. in Old Town Cornelius. Join the area's premier arts and music festival and get ready to experience Lake Norman's most action-packed and fun-filled community celebration with plenty to do for the entire family. Festivities include 2 stages of live bands and entertainment, local artists, craftsmen and vendors, local breweries, multiple food truck courts, a petting zoo, kid zones, games, giveaways, and so much more. The Tabo Walk begins at 2 p.m. Saturday in Old Town Cornelius. Northview's Stars Ministry presents a fundraising carnival for children and adults with special needs on September 28th. The carnival begins at 11 a.m. Saturday at 2615 Amity Hill Road in Statesville with free admission. There will be food, activities, and fun for the whole family. Please help raise funds for children and adults with special needs Saturday at the Northview Church of Christ in Statesville. The Breakaway Carolina Music Festival returns to ZMAX Dragway this Friday and Saturday, bringing a party like no other. The festival features 2 days of music, activities, and much more, beginning at 4 p.m. on both days. Visit CharlotteMotorspeedway.com for information, tickets, and details for the Carolina Breakaway Music Festival this Friday and Saturday.
The Renaissance Festival is back! Saturdays and Sundays, October 5th through November 24th. Jousting nights, mermaids, fairies, dragons, oh my! Tickets available online only at renfestinfo.com. Don't miss it!
To keep up with all the events happening around the community and much more, including amazing local deals, download the WSIC News app today.
Making your money make sense. Dollars and Cents with CFP Joshua Dobi on 105.9 100.7 WSIC.
Hello and welcome back to Dollars and Cents, presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much for hanging with us here. Second quarter of today's show, football reference. I mean, folks, we're in the middle of it. It's football season, and I don't need to tell you that if you're a football fan. I mean, this is kind of the high time right now. And I also got to tease up our sports producer here, Joe Berg. He's going to be following me after the 5 o'clock hour with the scoreboard. He's going to be giving you all things, not just on the national level, but at the state, local level, college, high school teams. You're going to want to make sure that you hang around to hear from him as well. I'll tell you, it's one of my favorite times of the year. I do. I love it. I mean, we're almost at the space, and you know this. We're not quite there, but we're almost at the space where we have some college or professional football game on 7 days a week. We're almost there. I'm holding my breath. We got to get Tuesday in there somehow. Tuesday, I know we have some Wednesday games. We got to get Tuesday in there with some kind of regular thing. Maybe they could do a Monday night A and maybe Tuesday B NFL game. Anyhow, I appreciate you hanging around. Thank you so much. Now, here on Dollars and Cents, as we're giving attention again to all things economic and financial, I took the first segment to talk about those things that have to do with AI or artificial intelligence, and specifically was given some attention to this group, OpenAI. Now, it's a private company. It's not publicly traded, but it could happen with their announced intentions to move from a nonprofit company to a for-profit company, which legally, I'm not really sure how you do that unless they establish a separate company. That's for good, intelligent attorneys to figure that out. But there certainly does seem to be some intentionality to have their investors, and there are significant ones, all the way up to and including the likes of Microsoft and Apple, who have invested heavily into OpenAI, the company. And so it's going to be interesting to see what that looks like and how that for-profit entity looks. And then, of course, what that's going to mean for us in terms of our experience with ChatGPT or any future kinds of iterations of it, which certainly will be coming down the path. All right, let's pivot a little bit. Let's talk interest rates. Got to do it. Federal Reserve here last week reduced the overnight lending rate to member banks by 50 basis points. I know that got a little wordy there. Stay with me. What the Federal Reserve did is they reduced the rate that they charge to federal banks to borrow money from them. They do it all the time. Member banks, as they're called, borrow money from the Federal Reserve at one rate so that they can then lend it out to borrowers at a slightly higher rate, and they keep the margin. That's a very, very, very common practice, very common in our banking industry. Well, if the Federal Reserve reduces the rate that they're charging for banks to borrow that money, well then, theoretically, those banks don't have to charge as much to the borrower in order to be able to still have a nice profit margin. And that's really where the trickle down effect, if you will, of reducing the overnight lending rate by the Federal Reserve has come in. But we've started seeing it in a couple of different ways. We just bounced into a 30-year mortgage, average 30-year mortgage. I just saw this below 6.1%, which you may say, well, it still sounds pretty high compared to the 3.5% mortgage that I have. You'd be correct compared to a couple of years ago, no doubt about it. But when we look at the average, I'm going to throw out a couple of data points to you there that may be helpful to you. A year ago, we had over a percentage point higher, meaning we're about 7.2, 7.3% a year ago for the average 30-year fixed mortgage. We spiked out at almost 7.8% for the average 30-year mortgage, again, about a year ago. And then I'm going to give you one that may just have you scratching your head. Go ahead and check me on this. I'm telling you the data's out there. You can check me on this if you like. The average 30-year mortgage over the last 50 years, what do you think it might be? I'll let you think about it for a minute, then I'm going to give you the number. 7.6%. Actually, a little over 7.6%. 7.6% is the average 30-year mortgage, fixed mortgage rate over the last 50 years, not 15, not 5, but 5 decades. That's been the average. So we've spent some significant time above that average. Obviously, here most recently, we've spent some significant time below that average, but you got to put all those together in order to get, wait for it, the average. You got it. All right. So when you're looking at it, you're looking at the context of where interest rates are right now, because I have this conversation a couple times a day, literally, with folks in one context or another, looking at where interest rates are right now for mortgages and say, gosh, anything has a 6 or a 7 associated with it, that's pretty outrageous. And then I encourage them to take a look at the full expanse of history and say, we're just barely average right now. And actually, now that we're down in the low 6s in terms of the average 30-year fixed mortgage right now, we're below average from where we've been here for the last 5 decades. Now, I know we're definitely above where we were a couple of years ago, but don't let that proximity bias color you too much in terms of how you're thinking about where we are. It's important to have good understanding, yes, about where we are. Our rate's going to go lower, maybe. We'll talk about that a little bit later in today's show with regards to possible actions by the Federal Reserve before the end of the year. But we're still below average. And so I think that's important for us to remember, again, in the context of history, especially as we're looking at that. Now, that's on the debt side of things. What about the savings side of things? Well, if you've had a high yield money market, or if you've tried to renew a CD here in the last couple of weeks, you know exactly where I'm going with this. There is also a corollary movement on the savings side, meaning that the interest rates that we have been able to enjoy here with our CDs, with our high yield savings accounts here over the last, let's say, 6 to 12 months, give or take, those have started to come down some as well. Those numbers that we saw in the 5s in terms of annualized yields, those are starting now to come more into the 4s. And of course, the yield curve is still trying to balance itself a little bit, trying to figure out what the Federal Reserve is going to do. So it's still a little bit of a dishwasher in terms of how it's swirling around, no real direction for bond yields at this point, but still different than what it was here even just a couple of weeks ago. So we're seeing that on that side. So we're seeing a drop in borrowing costs. I use the 30-year fixed mortgage just because that's so well known. But then we're also starting to see a reduction in the amount that we're paid for savings. Now, I throw out another data point to you here, because this number, when I was doing my research, just blew me away. And I watch this stuff for a living, literally. And I watch what's in money market accounts. And money market accounts are like savings accounts, but a little bit different in that they are technically securities. They are not FDIC insured. They're SIPC insured if they're held with certain entities. Not going to get into the differences in the insurance. Just be aware that that's out there. And so when I'm looking at money market balances, usually they're running 2-3 trillion. Here, I know it's a big number. I say that casually, but 2 to 3 trillion is usually what we got sitting in money markets. That number has swelled significantly here over the last year. Remember, I was saying some of our high yield money markets were north of 5% annualized yields there for a while. Just looked at last week's numbers actually, and $6.7 trillion sitting in money markets right now. I mean, just huge, more than double what would be the quote average kind of balances that we would expect to see in money markets in this country in a given time frame. And again, I think folks were taking advantage of some of those interest rates. You know, very little downside risk, at least historically speaking. Opportunity to get some very nice yields, fully liquid in many instances. That you can access it very, very quickly. And so we're seeing a tremendous amount of money that's sitting in those spaces. Now, what do we think is going to happen with those dollars? Well, I've seen a lot of speculation about it. You know, very often money that's sitting in money markets, because very often those money markets are inside of brokerage accounts or stock trading accounts or equity trading or securities trading accounts, that there's some supposition that, well, that's money that's getting ready to come into fill in the blank markets, bond markets, stock markets, commodity markets, etc. I think it's a little presumptuous at this point. That's just my opinion. This is my opinion on this at this time. I think folks have been so starved for yield for so long that we're seeing a tremendous amount of assets that are moving into places that have some yield, that are not, you know, the standard equity dividends that folks have had to use for a number of years when interest rates were at a practical zero. So I think that's part of the reason why we have such a huge amount in there. But I don't see necessarily where those dollars, that $6.7 trillion figure, I don't see necessarily where that's going to flow back into the market very quickly. Meaning and specifically the equity markets. I think that would be a little bit presumptuous at this point. So as we're looking at it, well, okay, that's not all that great in terms of rates coming down, but it is a function, a trickle down effect, if you will, of the Federal Reserve dropping those rates. I mean, Goldman Sachs has a high yield. Goldman Sachs, by the way, publicly traded company, ticker symbol Green SAM, GS, not a recommendation to buy, sell, or hold that stock or their bonds or anything else for that matter. But just announced a pretty notable reduction in their high yield savings account option that they utilize through an arm of their business called Marcus. And that's a semi benchmark. I mean, not the only benchmark for high yield savings, but definitely one of the ones that's out there because Goldman Sachs is so prolific, certainly in terms of the financial and investment universe. So interesting to hear that cut in that interest rate. Still north of 4% in terms of annualized yield, but not the same as 5%. And certainly if you're doing percentages, a pretty notable move. All right, let's keep going here. I got to move on to one of the best ticker symbols of all time. I mean, this one literally is one of the best ticker symbols of all time. And it's for Southwest Airlines. Now, you may be one who flies a lot. You may not fly a lot. But you certainly, I would think, are familiar with Southwest Airlines. Southwest Airlines, publicly traded company, ticker symbol, hold on, wait a minute here, LUV. Yeah, you heard me right. Lucy Umbrella Victor. In terms of the ticker symbol. I mean, they got a heart in their logo. I mean, how can you go wrong with that? To have a ticker symbol that phonetically comes out to love. I think that's wonderful. Anyhow, kind of interesting that they announced a very sizable stock buyback. You don't see that very often with our commercial legacy airline carriers. Very, very interesting. $2.5 billion buyback. The market loved it today. They came, their stock popped up 6 to 8% one day. Huge amount of movement for a company like that in a single day in a positive direction. Very interesting to see. There's definitely some intentionality about restructuring that business at Southwest Airlines. New CEO, some other players in the mix as well, who are going to probably be shape-shifting how they do business, and this may be one of the ways in which they're doing it. All right, we're going to take a quick moment here to hear from our sponsors. I appreciate so much you hanging with us here on Dollars and Cents. Hang with us as we come back for the second half on WSIC.
More of Dollars and Cents with certified financial planner Joshua Dobi is coming up on 105.9 100.7 WSIC.
Hurricane Helene making its way toward Florida this evening, but we need to be alert.
doing?
Oh, I figured if I rubbed my lawn and said drumlandscapesupply.com, I'd have the dream lawn I've always wanted.
Prioritizing your health is one of the best ways to take
Can you
care
hear
of
me?
yourself. From routine visits to the joys of pregnancy to the illnesses that stop you in
Are
your
you there?
tracks,
Hello? Hello,
Iredell
hello?
Health System will be by your side. Learn more at iredellhealth.org.
This is a Bloomberg Money Minute. Minutes ahead of Wall Street's closing bell, we could see another record closing high today for the S&P 500. That's after initial 100 points, 0.5% higher. The Nasdaq up 0.2%, and the S&P 500 up by 1/3. The big gainer shares of Micron up more than 15%. That's after the nation's largest maker of computer memory chips gave a strong sales and profit forecast helped by demand for artificial intelligence gear. And airlines are seeing big gains today after Delta on Wednesday and Southwest today both announced changes in route cancellations aimed at lowering costs and boosting revenues. Shares of United up 9%. Delta and Southwest each up about 6%. Tom Busby, Bloomberg Radio.
It's Dollars and Cents with certified financial planner Joshua Dobi on 105.9 100.7 WSIC.
Hello and welcome back to Dollars and Cents, presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much for hanging with us here. Second half of today's show. If you're one who's a 9-to-5er, you got 24 minutes and 38 seconds until you hit the finish line, and I appreciate so much you spending that time with us here as we get into the second half of talking about all things economic, financial. Now, I got a little granular on you in the first half. I'll admit that. We went from OpenAI and getting into the granularity of profit and nonprofit entities. And then we got to the Federal Reserve and movements on interest rates. All right, so I'm going to step off the gas. No, I'm not going to step off the gas, but let's say we're going to just point the car in a slightly different direction here so that I can keep you with me. I mentioned just in passing there in the first half there about speaking of all things AI, but I promise you this will be one that maybe be a little bit more fun for you. That Meta, so Meta, the old Facebook, not just Facebook, Meta is actually a larger company, but Meta, primarily Facebook, publicly traded company, ticker symbol Mary Edward Tom Alpha, not a recommendation to buy, sell, or hold Meta stock, came out with these new, they're new because they already had a pair that were out there in circulation, but these new updated at the Connected conference this past week, about these new, and they are literally Ray-Ban glasses. Now, Ray-Ban, if you're not one who likes luxury sunglass wear, you may not be familiar with them, but Ray-Ban's very, very popular with a lot of folks. And they came out, they got some kind of collaboration going on between Meta and Ray-Ban, but they're AI glasses. And they're stylish. I mean, they're not the kind of thing that look like, you're from outer space or something. They're the kind of thing that actually just visually walking by would look like something that that you might wear, just for fashion reasons. But some pretty amazing capabilities associated with it, including one. I'm not going to get into all of them here. I just want to make you aware that they're out there. Looks like they started about $299 a piece, which they better be some pretty nice glasses for $299 as a place to start, because I'm sure the price goes up from there. But they will remember. Apparently, there's some kind of functionality. The glasses will remember, say, where you parked your car in a parking lot. Which I don't know about you, but I could periodically use some help in remembering where I parked my car. But apparently, because it's seeing things and remembering things, that it can recall for you things like where you parked your car, which pretty amazing. I mean, and for those of you who have a little more gray hair or less hair, and I'm in both of those categories, I mean, we're literally living out Jetsons cartoons right now, aren't we? I mean, this is the kind of stuff we used. I mean, we got watches that were like Dick Tracy. Right, Dick Tracy, the cartoon character. We talk into our watches now. We've got hologram this and artificial intelligence. That, gosh, we're ahead of the Jetsons at this point. Pretty amazing stuff. So anyhow, Meta coming out with those new glasses, meant to really be, I would call them more as much fashion pieces as they are experiential in the artificial intelligence world. Pretty amazing. Pretty amazing stuff. All right, let's keep going here on things that are interesting. Mars candy. Well, I can't call them Mars candy. Let me just call them Mars. And Mars is a privately held company, has always been, primarily controlled by one family. And I mentioned a couple of weeks ago how they've made an offer to buy all of Kellanova, which you may not recognize, but you'll recognize the previous iteration of Kellanova, and that is Kellogg's. So Kellanova is the snacks end of the business for Kellogg's. Mars made a very substantial offer to buy them out. And that hasn't closed yet. If that's going to close, that's going to be in the first half of 2025. And so we'll watch that to see if that happens. There may be some antitrust concerns. They say they're not. We're going to have to go through some process there before that happens. I'm not getting into that, the Mars Kellanova end of things. I'm coming at you with something much more serious from Mars that they announced. They have finally come out with, wait for it, peanut butter and jelly M&Ms. Now, if you know nothing else and learn nothing else today from this week's version of Dollars and Cents, peanut butter and jelly M&Ms. Now, my first thought was, why didn't we have them before now? There's some kind, and there probably is. Somebody out there in the food business can probably explain it to me. Why didn't we have peanut butter and jelly M&Ms before now? Because we've had peanut butter M&Ms for a while. I know this firsthand. I have, let's say, partaken of probably more than my personal allotment in this country of peanut butter M&Ms. I love them. They're fantastic. The whole chocolate peanut butter combination. But now, got peanut butter and jelly. Pretty amazing stuff. So if you're an M&M person, be on the lookout for it. Peanut butter and jelly M&Ms. They're going to come into stores here, it looks like in the fourth quarter of this year. So really towards Thanksgiving, Christmas kind of time. However, apparently there's some functionality, I was informed of this, where you can buy them online at MMS, that's right, MMS.com, which is the M&M's website. And there is some functionality to be able to buy them there as well. Again, peanut butter and jelly M&Ms. I mean, where do you go after that? I mean, we talk about a lot of things here. Of course, last week we had the $1 million contest for a new version of the Burger King Whopper, which that would be a tremendous combination, actually, just to have Whopper in one hand, peanut butter and jelly M&Ms in the other. Yeah, okay, that's good enough for me. Anyhow, so pretty interesting. Mars certainly very, very prolific in the snacks end of things. M&Ms ubiquitous in the candy end of things. By the way, just as a sidebar, I found this in doing some of my due diligence as well, that at Mars, there is a position, a pretty significant position that a gentleman holds, and his title is the Director of Halloween. I think that's pretty impressive. And now the idea behind it, I'm making a little bit of a joke about it, but the idea about it, I mean, Halloween is huge for candy companies for the obvious reasons. So being the director of Halloween is a serious business with the Mars Group because of, again, how prolific they are in the candy end of things, not the least of which M&Ms, as well as their candy bars and other sugary confections as well. So, but I thought Director of Halloween, pretty cool title. You might win the internet for today. All right, let's pivot up a little bit. I heard on the Bloomberg Minute there during the last break, and this was one that was on my radar screen as well, so definitely wanted to bring it up to chat with you about it. Shifted to semiconductors, computer chips. The most chips in this country, in the world, in terms of number of chips that are manufactured, is with a group called Micron, ticker symbol Mary Umbrella, MU, not a recommendation to buy, sell, or hold Micron. Very prolific. I mean, they are, you may not know them, but you probably have some in your laptop. You may have some in your car. You may have some in a number of different places in your home. Very, very expansive in terms of their manufacturing of computer chips of all sizes and varieties. Came out with a blowout quarter, and I mean blowout in a positive kind of way. Definitely took the market, I think, a little bit by surprise, and they attributed most of that positive uptick or surprise uptick to their AI chip business. Now, they are in the same world as some other entities we've talked about previously, NVIDIA, AMD, Intel. They're in that same world, but different. So I don't want to make too strong of a correlation to these other companies, other than to say at some level they are competitors. But they attributed their growth here in this past quarter, and certainly their go-forward projections which I thought were very, very rosy. That they're looking at the possibility for double-digit growth in terms of profit margins, and that's some unusual. That for a company of that size, been around that long, to have that kind of organic style growth is meaning not through acquisition but organic in terms of their current product mix, pretty impressive. And so the market loved it. The stock was up 15-16% today. Very, very impressive to hear that from Micron. They've been under the radar some. They haven't performed as positively, robustly as some of their competitors. I think they've been off the radar screen a little bit because of that. And that's been true for the last couple of years or so. So kind of interesting to see. Definitely going to be watching them. What does that mean in terms of the consumer, which we're going to talk about here a little bit later on in today's show. But let's pivot a little bit. Let's talk logistics. I know it may not be the most riveting thing to you, but you may want to listen to me on this because of how much logistics affects everything. And by everything, that's not a metaphor. That's not hyperbole. I mean everything, meaning just about everything in this country that we utilize at some point was sitting on a truck or a train or a boat or all three. And so logistics have huge impacts on the consumer here in the U.S., both in terms of what is available and then when it is available. Setting that up so I can tell you what's out there, and one of the things that we're watching here over the next several days, there are a number of ports, and ports would be where ships come into shore here. I'm speaking here in the U.S., but a number of ports on the East Coast and on the Gulf Coast, which are looking at the possibility of a union strike. There has been disagreement between the union, which represents East Coast ports and Gulf ports, with the owners of those port systems about wages. And so there's going to be, let's say, a lot of negotiation, or if there isn't going to be a lot of negotiation, we're going to have some shutdowns on our East Coast and Gulf ports for inbound ships, which are bringing goods here, and outbound for that matter, when we're doing export kinds of things. But that's going to affect, say, the Port of Baltimore. That's going to affect the Port of Savannah. That's going to affect also on the Panhandle end of things in the Gulf of Mexico. That's going to affect Alabama. You're going to see all of this that's going to transpire. And a number of manufacturers have actually anticipated this and shifted a number of their their imports arrival places to the West Coast ports. And the reason why they did that is because that's a different union which represents the West Coast. And so when we're looking at that and we're understanding what that means from a logistical standpoint, that's much more important. That's much more important for us to pay attention to it, because if there's a slowdown, could slow down the Christmas retail season, could slow down the consumer in terms of what he, she, and we are able to buy. What's that going to mean in terms of the power of what the consumer is going to be doing here coming into the end of the year? Remember, the consumer, 2/3 to 3/4 of us of what we have here in terms of growth in our economy. So very, very important, very, very important for us to be watching that, paying attention to it, making sure that if we understand a little bit about where the consumer is, then we might be also able to make some projections with regards to what's happening to us economically as well. So definitely going to be the kind of thing that we're watching, definitely going to be the kind of thing that's going to be on our radar screen here. And we're going to want to be mindful of it, especially as we're coming into to the end of the year and what that means for us overall. And then most importantly, as we look at 2025 and beyond, certainly we're going to be talking about it. All right, hang with us here on WSIC. Back in a moment.
party like no other. The festival features 2 days of music, activities, and much more, beginning at 4 p.m. on both days. Visit CharlotteMotorspeedway.com for information, tickets, and details for the Carolina Breakaway Music Festival this Friday and Saturday.
The Renaissance Festival is back Saturdays and Sundays, October 5th through November 24th. Jousting nights, mermaids, fairies, dragons, oh my! Tickets available online only at renfestinfo.com.
Don't miss it! To keep up with all the events happening around the community and much more, including amazing local deals, download the WSIC News app today.
Dollars and Cents continues now. Here's your host, certified financial planner Joshua Dobi on 105.9 100.7 WSIC.
Hello and welcome back to Dollars and Cents presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much for hanging with us here. Fourth quarter of today's show, Football Reference. And I appreciate so much you here on the sprint as we make our way through the worlds of finance and economics. And as we went to break there, I was getting carried away. I got pretty excited about what was happening on our ports there. And I say that not because I'm a logistics expert or that I expect anybody who's listening necessarily if they are, but there probably are some within the WSIC listening audience. But definitely when we're looking at the impacts of what happens from our logistics, I was talking about there that the East Coast and Gulf ports the union there may go on strike. A lot of companies, importers, bringing their deliveries now in through the West Coast. Different union, not going on strike right now. So what does that mean in terms of the consumer? The consumer's ability to be able to consume, to be able to buy. What does that mean for the Christmas retail season? Is there going to be a slowdown? Is that going to affect company earnings? We're going to be watching that, paying attention to it. By the way, sidebar, at least insofar as the East Coast and Gulf ports are concerned, haven't had a strike since 1977. Now, some of us, including this person who's speaking, remember 1977, but that's quite a long time ago that it's been since we're having this kind of issue and needing to address it. So kind of interesting. Going to be watching it. Definitely may have some impact insofar as the retail experience is concerned. All right, let's pivot a little bit here. You heard me talk about some fun kinds of things. I got to bring up one more fun kind of thing here. Jell-O. All right, now hold on. Stay with me here. All right, Jell-O. Now, Jell-O, all the trademark and all the production and sale is owned by a group called Kraft Heinz, publicly traded company. Kelly Henry Charlie, KHC, is the ticker symbol for Kraft Heinz. Not a recommendation to buy, sell, or hold their stocks, bonds, or otherwise. But I had to share this. This came across my screen as well. And you may wonder how I get Federal Reserve rates and then Jell-O on my screens. I have a fairly diverse screen. I got a lot of stuff that's coming across my screen. Anyhow, there are these, and check me on this. I don't think I'm crazy. You can buy, if you would like, a Jell-O chair. Now, wait a minute. Now, it's not the Jell-O that you put in a bowl and you eat for dessert, or that you're feeding little ones. Okay, so it's not that, but it is a chair made by the group that makes Jell-O, meaning the Jell-O Group, and you can buy it for your apartment, condo, home, wherever you may want such a chair. It looked like they were kind of pitching it for college dorm rooms, kinds of things. Check me out on it. You can find them on Amazon, and at least what was represented to me, $30 a chair. Not so bad for that. Don't know how comfortable they are. They certainly look interesting in terms of how they're put together. Maybe they're comfortable. If you sat in Jell-O, would that be comfortable? Never done that before. Maybe you have. You can, call us in here into the studio. Let us know if that's a comfortable experience or not. Anyhow, so a little bit anecdotal there. Chairs made by the Jell-O company, not of Jell-O, but from the Jell-O company, meant to look like Jell-O. And you can find them on Amazon. Jell-O owned by, again, Kraft Heinz, ticker symbol Kelly Henry Charlie. Not a recommendation to buy, sell, or hold the stock. All right, let's keep going here. Let's get into markets a little bit. I know that's what we do in the fourth quarter, and it's important for us to talk about them. Very interesting. Very, I know I say that all the time, but it is. I mean, especially if you have your 401k or you have an IRA or you have other savings which are invested in the stock and bond markets. Very, very interesting. to see it. In a couple of weeks here, we're going to get back into earnings season. So you're going to hear me talking company earnings pretty much nonstop there for a while as we just hammer through the significant impact points for the markets and for our economy. But we're in this season right now where it's a little bit quieter. Not as many companies are reporting earnings right now. The market's kind of in a washing machine. And I know you've heard me say that previously, but it's true. It's splashing up, it's splashing down, but it's really just kind of spinning around in a circle without going very far in either direction. It has definitely bounced back from that very quick pullback that we had at the first week of August, where it dropped about 4% in a week, and that pretty notable as measured by our most popular stock indices. Definitely has bounced back from that, and is really back to the place where we were before it, and even maybe a touch higher, depending upon which part of the market that you're watching. But it's not true that every stock has done well. It's not true that every sector has done well, but there has been a lot of positive this year. And when I say positive, that can mean low single digits, or it can mean, in the 20s, 30s, 40s, and 50% and even more in a given year. But what does that mean as far as expectation is concerned for the balance of the year? Well, I'm going to start out by, I guess, maybe just pouring a little water on the fire a little bit here, that I have reserved expectations. Truly do. And it's not because companies are bad or that the economy is falling apart. It's probably more of a technical look at things, saying that we've had another good year to this point as measured by our equity markets. And to expect unnaturally that every single year is going to be an above average return year in our equity markets is just not prudent. That hasn't shown to be historically true. That's probably not a prudent way to think now. But what do you do? So now that we think that, okay, well, what do we do? Well, the answer is different for everybody. You know that. I have to provide that caveat for you first. It's going to be usually different for the 25-year-old than it is for the 75-year-old. You know that as well. But it is important, especially into a place of strength. And that's really what I want to highlight here as we're looking at the markets here in the fourth quarter of today's show on Dollars and Cents. You always, if you can, you want to make decisions, tweaks, adjustments into a position of strength, meaning that it's best to look at options when you've done well or when you've had a positive movement in your overall portfolio. Very, very important to be able to do that. Let me say it differently. If you make decisions on the other end of the spectrum, whenever your portfolio is down significantly, well, there's a whole lot more risk associated with that, because it's possible that in making changes, you may miss out on the recovery from where you've been, and then you're locked in, or you underperform the markets for some amount of time. We've seen that happen many, many, many times. I'm going to use an extreme example just to highlight the point. 2008, 2009, very significant in terms of market pullback, very significant in terms of negative equity or negative stock performance. That was the financial crisis, and it was miserable for about I'd say 2.5 years. Was really just miserable coming out. It was really 2012 before we started to get our footing a little bit market wise. And there were folks, and I say this because I've seen it firsthand. And as folks bring portfolios to us, take a look at them. There were folks who got out in 2008 and 2009 and never went back in. Now, I understand why they did, because there was some concern about our financial system. There was some concern about our economy overall. Was this going to bring everything to a grinding halt? I mean, I remember conversations about Bank of America, and I'm not highlighting them unnaturally. Our financial system overall was teetering, but I remember conversations about Bank of America, publicly traded company, ticker symbol Bravo Alpha Charlie. But I remember conversations among experts, among folks in the U.S. Treasury, talking about whether Bank of America, one of the largest banks in the nation in terms of assets, should be nationalized, literally. And nationalized, if you're not familiar with that term, that's where the government takes over. And that's it. There's no more stock, there's no more bonds, there's no more nothing. It becomes a government entity. So if we're on the space of talking about one of our largest banks being nationalized, which there was conversation, legitimate conversation, if that should happen or needed to happen in 2008, 2009, then I understand why folks would have a significant amount of fear and just got out of the market. The challenge is, and this is the other side of that thought process, the challenge is, generally speaking, When do you get back in? And I know that's a brutal, maybe impossible question to answer unless you have a discipline. I mean, I understand the pain that comes with an investment that's not doing well. I understand it very well personally, and I understand it very well through other folks who have had those experiences. But when we look at it, you need to evaluate, and you have the blessing now possibly of being able to do that into a position of strength, need to evaluate what's going to take me from where I am today to the next space of growth. It may be, as it is for many, many, many folks, stick with what you're doing. You got a good plan, you have good investments, so you stick with them. Is there going to be volatility in a negative way at some point? I promise you, in almost every non-guaranteed investment, the answer is yes, it's going to happen at some point. So you know that in advance, so we shouldn't be surprised when it happens either, but the market always seems to be surprised whenever it happens. But then that might be an evaluation point. Do you also look at it and say, wow, we've had a tremendous run that's been above average for a significant period of time. Perhaps I should take some of the proverbial cream off the top. Maybe that's something to consider. Again, I'm offering these up here almost anecdotally because these are not recommendations. This is not just a blanket way of recommending anything, because I'm not recommending actually anything in what I'm talking about here, but really just some strategic thought processes, which, again, if you're in a place where you're blessed to have had some growth and perhaps even some above average growth inside of your portfolio this year, what an opportunity to be able to reevaluate your strategy. And again, you may land in a space where you say, boy, it's working pretty well. We're going to keep doing what we're doing. And that's great. And then you may also look at it and say, well, we're going to make some tweaks and adjustments. But again, you're doing so into a position of strength. What an awesome opportunity to be in that kind of space as well. Really awesome. And that's where you want to be. All right. We're rapidly approaching the end of our time together here. I got so much stuff. You should take a look at my hit list here. I mean, I got through about half of it today. There's so much going on, but I wanted to spend some time talking on the markets there. That's important stuff. Very, very important to keep that kind of thing in mind. Let's do a lightning fast recap before we got to run out the door here. Federal Reserve, they cut rates. Probably going to look at cutting rates in November, December at this point. We're going to watch it closely. Also with regards to the markets in your portfolio, take a look at it. Perhaps this is the time to make some adjustments or not, but it's dependent upon you and doing your homework. Well, friends, I appreciate so much you hanging with us here on Dollars and Cents, presented by North Main Financial. My name is Joshua Dobi, and until next week, Thursday at 4, I'll look forward to talking with you soon.
Serving you better than ever before.